Hey guys, so in this video, I'm going to be talking about the accountant member of your team. So, how good of an accountant you need will range over the course of your investing lifetime, and it will also depend on how your principal source of income is generated. So, if you are a W 2 earner, you earn your income from a job, you may need some accountant help, but it won't affect you too much in the beginning. Really, more you want to try to find someone that maybe you could develop a long-term relationship with as your portfolio gets more complicated. Basically said, I'll do a separate video on taxes to cover some basic tax strategy, but if you're a W 2 earner, there's really not a whole lot of options open to you. So the value of an accountant at this stage is very little. And there's very little that they could do as far as creative tax strategies and planning. However, if your principal form of income is from a business, you now have opened up an entire world of opportunities available to business owners when it comes to not only saving on your taxes annually, but also maximizing your long-term wealth building strategy. At this point, you would want to know, or you would want to have an accountant rather, that is very familiar with your business and what your long-term goals are overall. An example that I give is when you convert from traditional funds to Roth funds, right? An accountant may advise you not to do that because you will increase your tax liability in that given year. However, we know that we would want to do that depending on certain parameters because of our long-term wealth building strategy. The more funds we have designated as Roth, the more that money has to grow tax-free. So having an accountant that understands your overall strategy is also very important. They understand why you are doing the things you are doing. They can also help advise you on how to creatively protect your nest egg through the tax strategy. And again, long term, this member of your team will become more important. As you add real estate to your portfolio, that complicates how you categorize the income that you get from the real estate because there's a way that you can pretty much get that income written off. It's called depreciation. Depreciation of the principal asset or the house. So having an accountant that understands that and why you structure your rental properties a certain way is very important for protecting you long term. So as your estate and as your wealth continues to grow, it's a very good idea to be in constant contact with your accountant and make sure that they are able to continue to advise you in that facet. So if you have an accountant who mainly deals with W-2 earners, and then all of a sudden you have a bunch of rentals and you have maybe a side business you started, and your taxes are starting to get a little more complicated, it may be time to upgrade accountants. You may not have the same accountant over the course of your entire investing life, although you may have that. But it's important that they themselves are constantly learning and growing as well, that they stay on top of all the new tax laws and strategies that come out, because this is a field where someone can be outdated, similar to like the medical field. You would want a doctor who is constantly staying up with the latest and the greatest, right? Because they will be able to provide the best service to you. The same thing is with your accountant. The quality of your accountant depends on them keeping up with all the strategies that are out in each year, because that changes over time. Tax limits change over time. So having someone that knows what they are and how to help navigate your strategy is very valuable. So again, hope this helps. Make sure you find yourself a really awesome accountant.